probably close to 80 to 90% of those have a captive. It's the marketplace that's in between that's relatively has not utilized captives very much. And the reason why captives are formed are various, but mainly they're to cover risks that are not covered by the commercial markets or to capture underwriting profit instead of giving it to the commercial markets. So I'll go to the next slide here. Why consider a captive? So if you have risks that you can't get insured by the commercial markets, you self-insure those risks. All right, so if you have a property loss that's not covered, let's say you don't carry earthquake insurance or you don't carry wind coverage, you're down on the Gulf, and you get hit, you have to pay that out of your pocket. And if you want to set aside a reserve for those eventualities, if you don't have it commercial insurance, then you got to do that with after-tax dollars. So the idea of a captive is that you're able to use pre-tax dollars funded into a captive to have a fund available to cover at least part of those particular risks. And those could either be property risk, liability risk, and anything along those two lines, property and casualty risk. So the net result is that you've improved your overall risk management of your business or businesses. That's the general idea. Now, it provides coverage for uninsured or hard to insure risks, and this has become a particularly increasing problem over the last 25 years. And I'll get into a little bit about that as we go along. But different liability items and different property items used to be covered by your standard general liability and property policies. And what's happened over the last 25 years progressively is that the commercial carriers have narrowed the coverage under their commercial policies by eliminating certain coverages. And so and at the same time, what's happened is that government regulations has created new liabilities for businesses, and plaintiffs' lawyers have become more creative on different theories of liability. So the overall risk to business owners has increased substantially, whereas at the same time, the commercial coverage that they buy has provided less coverage. The net result is there has been more retained risk by business owners. So the solution for some business owners, where it's appropriate, is to cover those uninsured or hard to insure risk in their own captive. Another reason why people form captives is to capture underwriting profit. I have a client that has had a low loss ratio for several years, and they're paying commercial insurance. Their loss ratio is about 15 to 20% of the premium. The commercial carrier has been making that profit for several years, and they want to try to capture that profit themselves instead of the commercial carrier. But at the same time, they want to be prudent with their risk management. So what they did is they went to a large deductible program where the higher claims are covered by the commercial carrier, but the lower claims, they cover those in their own captive, and so they can capture, hopefully, that underwriting profit themselves. That's another reason why people form captives. It's also said that access to the reinsurance market. That's particularly true in the larger captives. In the smaller captives, the reinsurance market is not as receptive. You don't get as good a deal as in the larger captives, with the larger premiums being